Kevin, I want to come over to you. You actually trimmed some of your Alphabet holdings. I'm looking at the charts right here. Alphabet shares down about 1.5% or so since earnings. What was the motivation for you to trim?
Exactly everything Brenda just said. This is a situation where we talk about it on the desk all the time. How many times are you using Google versus ChatGPT or one of the other AI companies? And I think I'm about 80% Google, 15 to 20% ChatGPT mostly. But the reality is that those advertising dollars are going to go somewhere. We're going to see them decline within Google. We're looking at this exactly the way we did United Healthcare with the DOJ news. We just wanted to get away from an overweight position, still have a little bit in Google, Alphabet. We still have a little bit, unfortunately, United Healthcare. And then it'll just be a question of how the stock trades, whether we get stopped out of it or not. Lots of reasons to like it, but a big reason and a huge catalyst earlier in the week that we hadn't really put into our thesis.
You know, a lot of people are talking about selling Alphabet right now. I think the metaphor a lot of people use is Eastman Kodak, where they could have bought digital cameras, but they didn't. But in all fairness, Alphabet has its quote-unquote digital camera. It has Gemini. It has Gen AI capability. So why are you so sure those ad dollars don't stay with Google Search and also go to their Gen AI product?
No, you make a great point. It's not Eastman Kodak, but if you were going to divide that 20% in my world up, Gemini's not going to get all 20% of it. So you're going to see less ad revenue flowing through. They've got lots of other catalysts, lots of other things and businesses under the hood, but when you lose the golden egg or the golden goose completely, it's going to affect your margins for sure.
So I agree with everything you just said. And the question, I think, for anybody who's long the stock is whether it's priced in or not. And we're not going to know, all right? The stock will either dribble down for the next several weeks or it will start to recover. I think actually a better analogy besides Eastman Kodak is Xerox, another nifty 50 company from 50 years ago, because Xerox, like Google, became a verb. You Xeroxed something, you Googled something, and that changed. And the question for me is whether Google's going to go where Xerox is now, which is not even an afterthought. Sorry, XRX. The answer is, for exactly the reason you just said, Kevin, I don't think so. I think it will stay relevant. It's not just the other businesses, YouTube or web services or Waymo or anything like that. It's that there's an incredible amount of intellectual property and talent at the company, which I think will allow it to modify its business. It won't retain 100% of the market share. Its moat to competition has been decreased. But much like when you look at Meta, however many years ago that mobile was a threat to it, and then after that the Apple iOS system change was a threat to it, the company adapted because it had good intellectual property, it had good talent, and I think that's what's going to happen with Alphabet as well.
Jim Butler, you own Alphabet. Brenda, you own Alphabet as well. You were just talking about it a bit ago. When we're talking about Alphabet, though, it's a kind of a conglomerate. We're not just talking about search and also AI. I mean, there's a lot of different parts of the business, including Waymo. We heard Lyft talk about moving into autonomous driving in their earnings call, and then also YouTube, big, huge ad business there. What's your view? Are you that worried about disruption when it comes to the search business? And I want to ask you, why can't Alphabet just buy one of their competitors in the AI space? I mean, they made a big acquisition earlier this year, Wiz, $32 billion. I mean, certainly Alphabet has a lot of cash.
They do, and I don't think the company is going to sit still. And Gemini is really highly respected, although I don't think the company has done a good job of really getting it out there and having people use it. So I think there is opportunity. I think the biggest problem, though, is when you look at today how the company's revenue and profitability is generated, a lot of it is coming from traditional advertising on Google searches. So that's a problem. But I agree that there are lots of other interesting parts of the business. YouTube is fantastic. When we think about where do those advertising dollars go, YouTube is a great avenue for that. Also, if you look at Metas of the world, I do think social media is another place where it's probably going to be pretty sticky on terms of the ad dollars going there. But I still think, and this is really a problem everywhere, is how do you monetize the ChatGPTs of the world, the Perplexities of the world, the Geminis of the world? How do we do that in a way that is really profitable for these companies, or is it not? Does it become a commodity business? So I think that's a big question that the market's grappling with. But when I think we look at multiples, Google's multiple, to Jim's point, has already come down. It's been low for a long time, so this has been an overhang. So you could argue maybe some of this is really already priced into Google, but is it priced into some of the other players out there? That's a bigger question.
All right. Speaking of valuation, Kevin, you made another move. You bought some Palantir, and a lot of buzz about this stock. The forward PE, I'm looking at it right now, 191 times forward earnings. Kind of walk us through the trade here. You bought at 109, so just kind of walk us through your thoughts here. Again, very high valuation stock. One of the questions here, does valuation still matter?
valuations do matter, and this is in our growth strategy. And remember, we can write covered calls against this thing and bring in massive premium. So it's a little bit different for me in this strategy to look past some of the high multiples. But at least it doesn't have this thing. Remember this, Jim? The infinity sign. So it had some earnings. We owned this last year. It got called away. We missed a big part of the run-up. When it rolled over, we were not part of that either. But on earnings, we thought they were fantastic. The stock sold off. We initiated a position. We actually bought more this morning. Stock's down about $2. We like what they're doing in the commercial side. That was up 70% year over year. It's not just reliant upon government contracts, which also were up handsomely in the first quarter. But this is a name that we think it certainly has to grow into that multiple, and a little bit more volatile stock than our normal name.
Yeah, by the way, I mean, the commercial and government business are about 50-50 now. It used to be kind of a black box, a lot of government contracts. They've certainly expanded. Brenda, does valuation matter? I'm looking at 191 times forward earnings.
Yeah.
Does that matter to you? And then also, Kevin mentioned the government work. Over in Europe, a lot more defense spending expected. You would think that Palantir would be a beneficiary of at least some of that.
Absolutely. And no doubt the fundamentals are positive for the company, but our concern is the valuation. So it's just too rich for us. We would wait for a more meaningful pullback. If and when we see that, we may become more constructive. But for now, we see lots of other opportunities out there in the market, given the volatility that we've had this year.
Weiss, we don't leave you out of this conversation. You have any thoughts about Palantir? I mean, either for the commercial business, which is AI software, or for the defense business, which is, it's more well known for, at least for now?
Yeah, look, I love the company. They are truly cutting edge and leaders in the defense space. This company was founded by, co-founded by Joe Lonsdale, and obviously he's still somewhat involved and has tremendous connections to the government. And Joe's just a brilliant investor and manager. So while I love it, I just can't come to grips with the valuation. Now, your question of valuation matter. I mean, that's an excellent question, because that's the heart of it. Look, we see valuation paradigms that can endure for a long period of time. And even if valuation doesn't go up from here, and there's no reason for it to, their growth is so tremendous that you'll see a nice move in the stock. Where valuation really matters is if there's a pimple. So if they get a pimple, then you'll see it burst, and that'll burst the valuation. So either that's an opportunity to get in, depending on how far it goes, but I wouldn't mind that happening so that I can get into it. I've been watching it for a long time, and I actually thought the valuation was high when it was $30. So I missed it completely, and good luck to Kevin. I'm sure Kevin's risk managing it appropriately as a percentage of his portfolio, knowing him, and he's a great risk manager.
All right, we're a good ways away from 30 right now, though. Palantir shares pulling back about 2.5%.
Yeah.
All right, let's hit a few more moves this morning, this afternoon, I should say. I'm used to saying this morning. Kevin, back to you. You're doing a lot today. You're selling some Vertex. So I want to ask, why sell Vertex? Obviously, the pharma space, the biotech space has been under a lot of pressure, but if you talk to any analysts, including the analysts at Jefferies, they say Vertex is the best position to deal with any possible tariffs or changes to regulation. Yeah,
long term, I think it's great, and if we can get back into it, we will. We were a little bit concerned about it heading into earnings, so we wrote a covered call, brought in $19.50 the day before. So on Monday, we wrote this call, $19.50. The earnings were a little bit less than expected. The stock sold off. It's down about $43. We bought that call back for 50 cents, so we hedged half of the decline, $19 of profit, and we basically got stopped out of the position, Frank. Not anything having to do with the name long term, but to Steve's generous compliment before, it's pure risk management.
Weiss, you trimmed a little bit of Vertex. What was the motivation for you?
Well, Frank, just give me a minute here. I'm looking for, see if I missed a call from Kevin telling you about those selling the covered calls. No, I didn't. Thanks, Kevin.
I post everything online. Every single trade we do, you can check it out online every day.
Yeah, okay. Yeah, look, I sold part of the position. I was troubled by the position for other reasons. Vertex I knew would be a slow ramp, but I expected positive commentary on it. But look, the FDA in the first quarter had just about a record low in approval of drugs. They've got a couple of important trials going on, and we'll see what happens in that regard. So from a macro standpoint, I was nervous about it. I was not nervous about it from a, really from a fundamental standpoint, because I didn't think it got ahead of itself like a lily, and I thought the valuation was very reasonable. So I'm going to hold the rest for now and hope for a bounce, and then I'll reassess.